Hey guys, AKIL'S here. Welcome back to another weekend trading edge video. I know, I apologize for missing you last week, but it's been freezing cold all year. I needed some sun, so I took a little trip to avoid seasonal depression. But don't worry, I'm back, I'm locked in, I'm ready to go. And honestly, this might have worked out perfectly because there are a lot of opportunities happening in the market right now, or I guess when the new week starts up. I'm talking 10 fresh trading ideas. I think, about 10 if I can count correctly. Don't hold me to that. But we're going to look across the Forex market. We're going to talk about gold, which is the fan favorite, and we might even touch on the Nasdaq if we have time. Now, before we jump into the technical stuff, which is what I enjoy the most, let's set the stage a little bit by just recapping the fundamental events that are happening right now, because yes, they do matter. So before I left for vacation, we had gotten into a war with Iran, and by we, I mean the US. When I came back from vacation, we are still in a war with Iran. And as I mentioned, I think it was in Trading Coach Podcast 1286, I think it's a video as well, the US versus Iran versus the markets. The major concern that comes from this geopolitical tension is going to be that narrow Strait of Hormuz. So how can a little passageway of water have such a big effect on the market? Easily. That's where most of the oil comes from. And with that strait being shut down or just blatantly threatened to have ships blown up if they go through, that is going to mean less oil supply comes through, going back to the basics of supply and demand. If there is less supply and the same amount of demand, prices then go up. If prices stay up for an elongated period of time, that is going to have an effect on inflation. And inflation is one of the two major things that the FOMC looks for when making decisions on interest rates and should they hold, should they hike, should they cut, and all that fun stuff. Now, speaking of interest rates, this was also a major week of interest rate decisions. There were seven central banks that had decisions slated to be made this week, which is why the markets were on edge. But because of all the uncertainty that's happening around the world, everyone stayed put until further notice, except for one, which was Australia. Now, what does that tell us about the market? Well, it tells us there's a lot of uncertainty. It means there's a lot of hesitation, as we would expect whenever there is a lot of weird stuff happening in the world. However, that's not going to last forever. At some point, there will be statements being made as we see kind of the aftermath of what's happening and the effects on global economy. So just because they held rates now doesn't mean it's going to be the case for the foreseeable future. There will be predictions being made, and that type of future guidance is what the market will be looking for going forward. Speaking of going forward, let's go forward to the charts and let's start digging into these trades. So let's take a look at the euro dollar, and we're going to be here on the 4-hour chart. And we're going to start with a simple one, but advanced. It's an advanced pattern formation, but it's a simple analysis because there's not really much I need to show you. But this is going to be a harmonic pattern called a bat pattern. And with all of our harmonic patterns, our advanced pattern formations, however you want to classify them, it starts with an impulsive leg. So this direct move from a swing high to a swing low, let me change this color. That was from the Trailing Stop podcast that I recorded before this video, which will probably come out Monday. So keep an eye out for that. This is going to be called our X to A. Our starting point is going to be our X leg. The end of our starting point is going to be our A leg. We then want to take a Fibonacci retracement tool and drag it from the swing high of the X to the swing low of the A. And we want to see which of these fib levels price comes to, right? In this case, it comes to the 50% level, which means I'm on alert for a bat pattern. Now, the cool thing with a bat pattern, it doesn't take a lot more analysis after that. I know that the bat pattern is always going to complete at my 886. Which is right up here, and this will be my zone. And what I mean by zone is this, right? This is the initial completion point for the pattern. This is really the end of the completion zone for the pattern, meaning that if price action breaks and violates that upper level, the pattern is invalid and you should not look to trade it. We actually had this very same opportunity on, and this is a bearish opportunity, by the way, sorry about that. We had the same opportunity on the pound dollar to end the week, and it moved beautifully, whatever that word is, right? Let me draw out the 886 so you know that I'm not lying. Bang, we had our swing high to swing low, X to A, our A to B coming to that 50%, not our 618. That B to C down here, and then we smooched it right off of that 886, and we ran down to hit, where's my thing? Here we go, target ones and target twos. Beautiful move. Hopefully we get something similar with the euro dollar as well. Next, we're going to head to gold, and we're going to go from an advanced pattern formation to a simple classic pattern formation. Now, really quick, gold has been getting ripped to shreds, right? After a long bullish run on gold and everyone excited about the new highs, we have spent the last 1, 2, 3, 4, 5, 6, 7, 8 days just nosediving. Now, just like when we were going long and everyone was saying buy, 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 and whenever buy, 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 right? Meaning that you should be cautious about buying by the time you hear it on the news. Now everyone is panicking and they're saying sell, sell, sell. And I would encourage you to be cautious about selling and perhaps look to buy, right? We have come down, for you guys that were in the income trader workshop, right? You should know this. We have come down, as we draw out our ebbs and flows, right? We did this a lot during the workshop, to a previous level of structure. We know that these levels of structure will act like magnets. Price will be gravitated towards it. These levels of structure are also going to be decision points where the market's going to have to make a decision. Are the sellers going to continue to value selling and push this thing lower past that level? Are the sellers going to say, hey, we've sold enough, I want to take some of my selling profit and start removing themselves from the position? Are the buyers interested in this level? Was someone that was interested up here, right, at 5.4s now saying, hey, this is a lot cheaper down at 4.6s than it was before. Maybe I should start buying again, right? These are those imbalance points in the market. It'll be interesting to see what it does. Now, we do have a few clues that we have down here, right? One, price action is coming into structure, the biggest clue of all. Two, we have our RSI, the relative strength index down here, way below our oversold level. If you remember from the workshop, the traditional oversold level is a 30. Akil and Jason, like their oversolds, very oversold. So mine is at a 20 and we're down here at 12. So extremely oversold there. So again, that is oversold in general means a lot of selling momentum, but it also means that that selling momentum may start to dry up soon. Now, as you go one time frame lower to the 4 hour, and I give you less of an indicator right here, this is where our classic pattern formation comes into play. And this is going to be called a double bottom. Price comes down. Let me use a different tool here, the small one, if I can ever find it. I never know where it's at. There we go. Price comes down. We create a nice bottom right here. This is a beautiful 3-bar reversal. Remember, high momentum to high momentum bearish candles, a nice little doji candle, which means indecision. And then, I thought we had a higher close. We don't quite get the higher close. I was gonna say, if we did, that would be, maybe we do. Let me just check. Not that this matters real quick. I'm just nerdy now. I want to see. 46, 49, 31, and 46, 50. Yeah, we do get a higher close, right? Am I looking at this right? 4649, yep, 4650. Yeah, so a higher close right there. So yeah, that in its own right could have been an entry reason, right, into a bullish trade. Or if you're looking for a more conservative reason, this is where you look for what we call a double bottom. And a double bottom is essentially where the market creates one bottom, it comes down, bloop. We retrace up, boop. We go back down for a strong retest trying to break through. And instead of breaking and closing through, we hold. And that's what we have right here. So this could be an entry technique, right, as well. You have a double bottom. You have it at a previous level of structure. You have RSI divergence as well, meaning that on our two equal bottoms right here, we have the RSI putting in higher lows. That's another clue that you can add to the mix. So a decent buying opportunity if you're someone that's interested in buying gold here on, what is this, the 4-hour chart. Next, we're going to head to Euro Yen. We're going to go back to advanced / harmonic patterns. I'm going to see if I can just keep going back and forth between like price action stuff. It's all price action, but like advanced patterns versus like more traditional price action trades. But we have a cool little doubler here on euro yen, we have two potential patterns setting up. We're going to start on the higher time frame, the daily chart. And this is going to be a Gartley pattern. I should make sure to measure this out to ensure it is. But once again, our initial swing high to swing low right here is going to be our X to A. I want to take my Fibonacci retracement from the high of that X, right? Broken record alert, to the low of that A. And this time, instead of just coming to the 50% level, it comes to the 618. So if we came to the 50% and held there, that would have been a bat pattern. We come to the 618, which means we're on alert for a Gartley pattern. Now, Gartley patterns are a little bit different. Let me just make sure I have a C leg there. There we go. Instead of just looking for a set Fibonacci number, I want to take my Fibonacci extension tool from the low of our A to the high of our B leg right here, which I did not label, but this is a B leg. And I want to look for a move to our 127 extension. So it's going to end up looking something like this. X to A, whichever one of these are the lows, A to B, B to C down here, our lowest retracement, and then a CD completion right up here at our 127 extension. Same thing as the bat pattern. We have a nice zone between the starting point of our pattern and then the high of our X leg. So bigger picture, nice potential bearish Gartley pattern here on the daily of euro yen. If we went down to a lower time frame, we have something else happening as well. We have another X to A right here, right? We've drawn it on a million times, so hopefully your eyes are getting better at seeing it. And as we go through our progression of fibs, 50%, bat, nope, 618, Gartley, 786, butterfly. So this is going to be a potential butterfly because this retracement passes the 618 and hits the 786. Now, butterflies are a little bit different than the first two patterns I showed you, the bat and the Gartley, where the bat and the Gartley complete within the X leg, meaning this zone before the X leg. The butterfly actually completes above. So the butterfly pattern is going to look something like this. X to, nope, wrong tool. There we go. X to A to B, B to C, and then that CD completion is going to complete above the pattern. For this reason, I'm not personally a fan of butterflies because we don't have that built-in structural protection that keeps us out of trouble, I guess, right? But in this particular case, right, if I look left, because structure leaves clues, we actually do have a nice level of structure that you can hide stops above. Remember the B leg of our bigger patterns. This would actually be a butterfly that is a safer butterfly, I guess you can say, which is why I would like this one more than other ones, purely from a risk management perspective. All right, back to the price action based stuff, right? We're on the New Zealand dollar right now. And this actually may be a pattern formation as well. I didn't even see this, but let me just double check right here. I surprised myself. Okay, it is a pattern formation. Yeah, so yeah, this could be a potential bat pattern as well. We'll draw that out. I'm still going to do price action stuff, so I'm sticking to my theme. But 4-hour chart here, this could be a potential bat pattern as well. So just keep that on your radar. Maybe that will help with potential targets. But what I'm looking for here from a price action perspective is this. Price action came down and we did this little dance, right? We had this series of breaking structure right here. Bloop. We came up to retest a previous level of structure. Look left. Structure leaves clues. And the expectation would be a continuation to the downside. But you can see we did not do that. We actually, and this is our high right there, we actually failed to extend to the downside. And then we pushed back up to the upside here. Now we're coming right back down. So we're in this weird little like consolidative state here on the New Zealand dollar. The question is, where do I think price action is going to go next? Well, we have this series of higher lows. We have our nice little high momentum candle right here, right? If you guys remember day 3 of the workshop, I taught you this. What do? Find the bar, consolidative bar, previous to that high momentum candle. And that's going to give us a good idea of where an important level of structure will be at. And you see that we're diving right into that level here. If we go one more time frame down to the hourly, we're also going to see a little bit of loss of momentum, right? Price action comes down from a steep move, and then we're starting to kind of just ebb and flow. If we can continue this ebb and flow into this level, this is going to give us what's called a falling channel, which is a loss of momentum pattern, which essentially is a sign that the bearish momentum may be slowing down and we may start to see a reverse in the opposite direction. If this were in the other way, I used the baseball reference where if you were to grab any type of ball and throw it into the air, it comes out of your hand with a lot of momentum. And then eventually it kind of hits its apex and the momentum slows down and it starts to reverse. This would be throwing a ball downward in space. So throw it down and it goes up. I don't know. You get what I'm saying. Just flip the whole analogy upside down. But that's what I would be looking for here on New Zealand dollar. This could be a nice little price action, bullish price action trade to keep an eye on, if I can get my arrows correct, for the week to come. Back to pattern. We have another pattern formation setting up here on dollar Canada. We're here on the daily. I think we spoke about this in one of my last videos. Maybe not, but we had a kind of a bigger pattern setting up as well. We'll leave that alone. But we have our X to A right here. I'm going to give you guys a little bit of a quiz to see how much you've been paying attention to. We retrace with our B leg back up to the 50% retracement. What type of pattern are we looking for? Type it below. Do not delete it. Hold yourself accountable. Let's see how many of you guys got it right. Pause the tape. If you said bat pattern, ding, 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 you are correct. Well done. You've been paying attention, right? So that means our bat pattern is slated to complete in our 886 zone, X to A to B, B to C, C to D up here, right? So that's going to be a potential bearish opportunity if we get there. We also have another bullish opportunity as well. You can see that we've created a little bit of a, I don't even know what to call this, just like a structural level here. We've consolidated a little bit of a shelf. That's the word I'm looking for, where we have a nice little structure shelf right here of resistance that we cannot break. But if we were to break it and violate it, meaning break and close above, there's nothing in the way, right? Price action wise, there's zilch here of us going to that bat pattern level, which is also the previous level of structure looking left. So on a lower time frame, or even on this time frame, if you can find the opportunity, if price action can violate these highs, boop, nope, here we go, try it again, boop, then this is also an opportunity to look for if you're a breakout trader, trade to breakout. I'm personally a pullback trader, so I always default to this, but there's different ways to do it. Look for the pullback and then look to see if you can catch that extension all the way up to that 138.80s level. And then, as we spoke about in the past, once you get to that level, if you're feeling fancy, right, you can do that stop and reverse method. And the stop and reverse method is pretty much where you go directly from one trading opportunity to another trading opportunity. So if you were someone who was trading one unit here, right, one pumpkin long, what you would do is you would set a sell limit order for 2 pumpkins short. So why would you sell a sell limit order for 2 pumpkins short? Well, because one of these pumpkins is going to cash you out of your bullish trade, right? You have to, if you're buying, you need to sell to get your money out. And then the other pumpkin is going to put you short in the new bearish trade, which is the bat pattern. Ta-da! Stop and reverse. Overly simplified and certainly out of season. Next up is going to be the Aussie Canada. And no, we're not going to be talking about a advanced pattern formation here on Aussie Canada. We're actually going to be talking about another price action and structure-based trade. And I sound so surprised because if you've known me for any amount of time or Jason, the Aussie Canada does absolutely nothing but consolidate, which is really, really good for pattern traders. So I swear 99% of my trades on this pair have only been patterns. However, recently this year, we've had a lot of other trading opportunities. So it's just weird to look at this and not look for pattern trades, although I think I see a pattern here as well. But we're going to look at a price action, nope, not a pattern, a price action trade here on the Aussie Canada. And you can see that if I draw out my ebbs and flows, and again, I'm just doing this because I told the traders at the workshop that to practice this, so I want to help you practice this. You can see that we have come back down into a previous level of structure. We can draw this little zone out right here from the lowest close to the lowest low right there. You can see we're hovering at it. And we have a nice little rejection there, which means there is some buying pressure. And buying pressure could be two things. It could be new buyers that are interested or sellers that are taking their money and they want to get out, right? Just like in the stop and reverse example, sellers to make profit need to become buyers to get out of profit. As we go one more time frame down, boop, we can see a nice little formation happening here. Once again, we have a high momentum candle. Then we have a nice pin bar, right? Price action at one point breaks below this level, right? The bears are running, but then, and this is why we wait for the end of the session, right? They got defeated. And you can see the wick gets pushed up. The close is actually higher than the open, and this becomes a very positive bullish candle. And then for confirmation, we followed it up with another bullish candle. Not the strongest bullish candle in the world, but a higher high, higher close candle nonetheless. So this in its own right is a good entry reason if you're someone that uses a higher high, higher close. You have price action at structure. You have our RSI, once again, massively oversold, down at 10 this time. You have your candlestick confirmation pattern. And as a price action trader, this is good enough right here. This could be good enough right here for a signal. But if you're someone that likes other indicators, there's different ways you can use this for entries as well. One, let's bring in a Keltner channel, right? A volatility band. You can use a Keltner channel, a Bollinger band, whatever is to your liking. They're a little bit different. I prefer the Keltner just because it's more in tune with kind of what I use in my regular trading. But pretty much these are volatility bands. And you can see that, well, we are way past the extreme of this band. So the rubber band has been stretched, right? I'll just bring in a Bollinger since that's a better example of rubber bands being stretched. But I would assume we're going to get the same thing. Yes, Bollinger in a very bad color here. Let's make this a limer green and thicken it up some. We'll just do that line. You can see we're also trading, right? Closing below that level, spiking below that band right here. And then we just got right back above it with the default settings. So you can use that as confirmation. You can even use indicators as a form of entry, right? One would be the RSI, right? RSI had dipped below, and then we've broken and closed back above the initial oversold limit. That can be an entry technique in its own right. I personally like doing that a little bit more with the stochastics. I don't think I have my default settings saved, but hopefully I do. No, I don't. So I don't feel like adjusting them here for the video, but you can look for the same thing with the stochastics. Either the K crossing the D, and the K is going to be my green thick line. The D is going to be my red line. Right, so when the green crosses over the red, that could be used as an entry signal. You can see it comes down into the oversold category and then boom, crosses right here on this pin bar. Or you can wait for the green to cross the red and cross back above your overbought and oversold levels here. Again, we're not customizing it or anything like that. My settings for the stochastics are a little bit different when I use them. But just to give you an example of how you can also use indicators as reasons for entry as well. I'm not a MACD fan, but let's just hop on the MACD real quick. I showed you guys I use a very simplified version of the MACD whenever I do use it. I'm just curious to see what a MACD would look like. Let's make this green, MACD. We don't need the histogram. I guess we can keep it on, but we don't really need it. So yeah, same thing. You can look for one of two things for the MACD. This is going to lag a little bit more, but you can look for either the histogram to switch from this reddish pink back to this green and go above that zero line. That's the really small line in the middle. Or you can look for the MACD to cross the green line to cross over the orange line as a signal as well. This is typically going to lag a little bit more than the other ones, but again, just giving you guys different options here. Next up is going to be our dollar Swiss. We're going to go from the daily to the 4 hour. Again, this may have another advanced pattern formation on it. It would make sense because the euro dollar had one. Nope, just a miss at the 50%, so not going to be an advanced pattern there. Let's go down to the 4 hour here where we have another classic pattern forming. This is going to be a head and shoulders pattern. Now, first and foremost, we have come to a previous level of structure, which is always a plus. Ding, add it to your score. But you can see we have a potential head and shoulders pattern setting up. Head and shoulders pattern is a classic reversal pattern, which starts ideally with a clear directional move, followed by a retracement, right? The same thing that we would see in a normal trend. That's going to end up being our left shoulder eventually. We then get another extension, but this one's a little bit smaller, giving us the slightest clue that momentum may be slowing down. And then we get a deeper retracement here, another slight clue that the trend is losing strength. And that's where we're at right now. The next stage would be a failed extension, right? So in a normal trend, we would extend higher and keep going to the moon. In a head and shoulders, we would see a failed extension. So price typically come in somewhat of a symmetrical area to our left shoulder. And then we would need to see a violation of the neckline, Speaking of necks, gotta crack my neck. Oh, whenever I talk about head and shoulders patterns and necklines, my neck gets all tense, right? We would need a violation of the neckline. And a neckline could be done two ways. You can have a slanted neck where you're connecting the dots like a trend line, or a horizontal neck where you're just taking the lowest point of the neck and using that as your horizontal level of support and resistance. But you would look for a violation of whichever ones you favor. So a break and close below this or a break and close below that. And that, my friends, would be your head and shoulders pattern. Head and shoulders top, to be specific, because it's at the top of a move. And the head is at the top of the shoulders. Euro Canada on the daily is next, right? Where did Euro Canada come to? Let me take out my favorite tool, which is going to be the horizontal line tool. I'll draw a line right at the low here. I'll look left. I don't know why I did that, but I'll look left and see that we did come down to a previous level of structure and we saw some rejection. Now, we have a nice double bottom here on Euro Canada. You remember this from gold if you've been paying attention. I still can't figure out what my arrow marks are, but bottom one, bottom two. And this is going to be something called a 2618, which is a secondary opportunity to get involved in a double bottom or double top for a few reasons. One, maybe you just missed the trade, right? We're not looking at the charts 24/7, or most of us aren't if you have a life. So sometimes stuff happens when you're just not around your charts and you're like, hey, I missed the double bottom. How can I still get involved? Or it could also be used as a more conservative entry approach. Let's say the double bottom isn't in a grade A trading opportunity. Maybe it's not at a key level of structure or the point in the price chart where you think we're most likely to reverse. You want to be a little bit more cautious in your approach. A 2618 could be used for that as well. So what you're looking for is this double bottom. You're looking for a violation of the V point. I still don't know what the technical term of it is. This point, right, of the double bottom. I'll draw it in so that makes it look a little better. The TP point, I don't know what it is. The pyramid point, I don't know. You give me, what do you guys call it? Seriously, shoot me a message below or a comment below of what do you call the top of a double bottom? The peak, maybe that's a good one. But would that work for a double top as well? Because then this would not be a peak. Anyway, if you have, I'm looking for something to call it consistently. So if you have any ideas, please type it in. I'm serious about that because I just want to call it something. But regardless, this point, you're looking for a move back into that double bottom and a chance to ride it up. Now, if you're a true 2618 trader, you're taking your Fibonacci retracement out from the swing low here to the swing high here, and you're looking to enter either at that 618, look at that, drew it right on perfectly. I'm good at this stuff, right? Or looking for your entry reason within this zone. So once we get to this 2618 trade. If you're not a 2618 trader, as we spoke about in the video where I think last week or the week before when I went on vacation, I had a schedule. I said there's only 3 ways to trade. This is nothing more than a pullback trade, right? So yeah, it's that. Let's simplify trading. Let's make trading simple again. I should get hats that say that on there. All right, getting to the end. I'm getting tired. You can tell I've been away for a while. I'm fatigued and out of form. But pound Aussie, another advanced pattern formation. We'll make this very quick because you've seen this before. I'm going to quiz you guys again to see how much you've been paying attention. What type of pattern are we looking for? Pause the tape at your leisure if you don't want the answer to be spoiled. If you said bat pattern, you are correct. If you said anything other than bat pattern, go back and watch the entire video over again. Just kidding. Unless you want to. That's not a bad practice, actually. But potential bearish bat pattern here. You guys know the deal by now. Sell in this zone or at that level. Bada boom, bada bing. Lastly, Nasdaq. If I can get through this because I'm winded. Nasdaq has come to a pretty decent level of structure down here on the daily. You can see looking left, we've got nice little spikes spikes, 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 and we're right down at that level again. So if you are someone that's looking for a reason to buy, we have a very big rejection candle right here. Obviously, I would want to wait for some confirmation, but it is a good sign of a hold of that level. If we can get that confirmation, I think that's a good buy. This was also the butterfly pattern that we spoke about, I think, in the previous Trading Edge video. Again, all these things run together. Not the butterfly pattern. Oh, this was the failed Gartley. Sorry. Yeah, this was the failed Gartley where we actually, I don't think we hit. Did we hit entries? Ah, yeah, failed Gartley. So you would have been stopped out potentially. Let me just see real quick. Ooh, yeah, probably just stopped out if you used the 113 stop loss. Sorry, I'm doing this all in my mind. Let me draw this in for you. Or maybe you might have just been saved, but it looks like it would have been a busted pattern, so a losing pattern right here. I would wait for confirmation, especially, or at least a higher high, higher close here for confirmation of a buy. If you want to be more conservative, I would even wait to see this level taken out, right? If we draw out our ebbs and flows real quick, just our most recent ones, we come down, we come here. Actually, we pause here a little bit. Little pause there before doing this, and then we come down here, right? If we can take out these highs, that's a really good sign of a rotation, break and close above there. If we can do that, I would expect us to return back up to these highs up here. So you could be aggressive and look for a move in this area, or if you're conservative, wait for a violation of this area and look to ride it up. That's all I got for you today, but I do have another video coming to you Monday on trailing stops, so make sure you tune in for that. If you're subscribed, right, the YouTube algorithm will put it in your home thing and you'll see it when it comes out, so make sure you do that. And also, if you have any other trading ideas that you want to share with me or the community that we have here on YouTube, type it in the comment section below. That way, traders can not just see my ideas, but they can see your ideas as well, and we can have a flood of good trading ideas to look at for the week ahead. All right, until next time, plan to trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.